Ladies and gentlemen, good afternoon. My name is Nick and I'm a financial analyst in OLYMP TRADE. As usual, today is Friday, and so it means that we start our stream about the most interesting and the most common psychological mistakes. Well, as usual, so before we start discussing one of the trading's mistakes, I would like to ask you to help me with checking the sound and the video. If everything's okay, if there are no technical problems, so please let me know somehow in the chat. And we will start speaking. Okay. Well, I see that there are plenty of people from Brazil, I guess. Yes, so hola. Unfortunately, I don't speak Portuguese, so Russian, French, or English. Well. Hello. Hello. Is everything okay with the video and with the picture and the sound? So let's check. From Nigeria. Okay, Nigeria. Hello. I'm handsome. Well, that's great. Thank you. Well, new here. Okay, new one. Hello. Okay. How to become pro in binary options trading? Well, that's a really good question. Jefferlina, can you say my name? I guess. Well, if I pronounce it correctly, well, Jefferlina Kenim, yes? Okay, hi guys. Well, to become professional, well, actually, so you have to read more, you have to learn more. Well, that's like general answer. Yes, well, speaking about like details, of course, it's better to learn the strategy, to learn some features of technical and fundamental analysis. Okay, guys, so let's start discussing. Well, actually, the stream will be really short, and we're gonna discuss one of psychological problems, which is called framing effect. So I would like to share my screen to you so that you will see. So this is some type of the task. Yes. So can you answer the following questions? So question number one: you get $200. What would you choose? A, get $50 with 100 chance, or B, get $200 with 25% chance, or lose nothing with 75% chance. Okay, so what would you choose to do in this case? A or B? A or B? So just in the chart, well, I see that there is a short leg. B. Okay, thank you. Kobe, yes. A. Jefferlina Rhodes, Monish A. Well, Samet A. B. A. A. Okay, so with 100% chance to get $50. A. Okay. Now, guys, so you have already $200. You have been given $200 more. So task 2 is the following. So what would you choose if you get $200 more? And you have two options. Well, option A, yes, lose $150 with 100% chance. Or B, lose $200 with 75% chance, lose nothing with 25% chance. So, well, in task B, what would you choose? What would you choose? A, okay. So to lose 150 with A, okay, with 100% chance. A, big risk gain. Oh, well, but you lose, well, in some way. A, okay. Thank you, guys. Well, look, this is like a little bit tricky question, because here in these questions, well, both options are the same. So here, look, in the first task, you get $200. So in option A, if you get $50 with 100% chance, it means that your financial results will be 250. On the other hand, yes, so you can lose, you can get $200 more. It means that your financial result will be $400 with 25% chance. If you look in the second task, so you will see that actually you've been given $200 more. Well, it means that you've got $400 already. And option A is the financial result will be exactly the same as with option A here. Yes, it means that actually if you lose $150, your financial result will be 250, the same as here. And variance B is also the same as in the first task. So actually what these two questions are showing us, that people, well, sometimes, so they prefer to choose different things, depends on, so let's say, so on the points of view. So if you look at the situation from the win side, yes, so that you can get something, you choose one option. But on the other hand, if you are looking at the situation from the losing side, from the loss side, you are choosing something else. So, well, a framing effect, guys, this is a cognitive bias in which people react to a particular choice in different ways depending on how it is presented, a loss or a gain. Well, actually, on the real market, so for example, well, after several losses, sometimes in a row, well, sometimes the trader starts risking more. So he's trying to get his money back, yes, and so he's risking more. Well, it means that actually he's trying to get his money back and to well, to compensate his losses, yes, and usually it leads to more losses. For example, martingale system, yeah, so when you try to get your money back using martingale system, which came from casinos, yeah, so you are always doubling the next sum of money, the next trades. So this is the framing effects, so bias, one of psychological mistakes which we have to try to avoid. So let's say so. Okay, so this is how it works, yes. So again, we are looking at the situation from different points of view, and our choice can be totally different, but with the same result anyway. So we are choosing different things because actually it all depends on how the situation is presented, a loss or a gain. Guys, so let me switch again my camera on, and I would like to ask you if you have any questions about this bias or maybe something else. Well, I'm ready to answer. We have like several minutes. Just anything, any questions you want, you can ask. Buenos dias. Nelson, well, Nelson, unfortunately don't speak Spanish. Well, Spanish is, well, I guess the most popular language maybe in the world. Well, I know that, but unfortunately, I don't speak Spanish. Any questions, guys? No doubts at this time. Monish is writing. Best strategy for trading, guys. Yeah, so actually we are discussing this question all the time. So what is the best strategy? I don't like the word the best. Yeah, so the strategy, it's your, this is something private. So let's say, so this is your own thing which you choose. In my opinion, so what are the best methods to trade? Yeah, so let's say so. So let me share my screen. Well, I guess it's like, let's go here, for example, in the charts. For example, today I was analyzing the currency British pound and Japanese yen. So, well, as for me personally, I prefer to use several indicators such as parabolic SAR. Parabolic, so these are these are dots above and below the chart. You see, so this is trend indicator. This is trend indicator. So let me remove, well, yes, extra things. Also, well, I prefer to use MACD. Well, I think that MACD is great. So MACD, it is, this is the trend indicator too. So it is showing the situation with the trend, and it is showing the signal. It is giving the signal when the lines are intersecting each other. So I prefer to use MACD. And also I'm using Fibo levels to define, to find the target. So for example here, look, if we analyze British pound and Japanese yen, this is 4-hour time frame, so pay attention. So I see that there was the trade down. Yeah, so there was the trend down, the bearish trend for a very long time. The currency tested the support level, so this is the level 143.18, and now this is the reversal. So the question is, when to buy? Well, in my opinion, guys, so if the currency breaks this trend line up, this will be the signal to buy. Also, this breakthrough has to be confirmed by MACD. So MACD lines have to intersect each other. Yes, and also, so now I see that parabolics are reversed. Yeah, so I got the first signal to trade up. So this is the strategy. Well, actually, which is based on indicators plus Fibonacci levels. You can use any other indicators you want. For example, stochastic. Well, some people prefer stochastic. Some people prefer, I don't know, Williams percent R. Some people prefer something else, alligator. Some people prefer Ishimoku clouds. Why not? So it all depends on you. Any other questions? Maybe about this. My strategy doesn't need any indicators, yet still I never seen any losses. Well, that's really great. So if you can trade, trades not using any indicators, well, it's up to you. It's up to you. I prefer levels. I prefer some indicators, not many indicators, but some of them, plus Fibo levels. Well, you can use any method you want. Yeah, so the question is only in financial results. So if your methods, if your strategy works, that is really, really great. Well, thanks. GDP reports, how could affect Euro USD? Well, it all depends on the facts. So let's have a look at the economic calendar, guys. So look, today, yes, well, in 14 minutes, we've got GDP report for the first quarter. This is the preliminary facts. The preliminary facts. So you see that actually the forecast is 2%. Yeah, so the previous fact was 2.2%. So if the actual data is bigger, is higher than the forecast, so for example, the actual facts will be like 2.5%. Well, definitely the US dollar will rise, Euro US dollar will go down. Otherwise, so if the actual fact is lower than the forecast, the Euro US dollar will rise. So the US dollar will go down in this case. So the question is about the actual fact. And this is a really difficult thing to try to forecast these. I would like to pay attention to retail sales first. So if you want to try to forecast the real GDP, we have to look at consumption and consumption. So these are retail sales. Yeah, so well, things which people buy in shops mostly. Which money management methods you prefer? Yeah, okay, so I will explain to you this. So look, guys, for example, again, so returning back to these currency. So look, actually I have like several types of money management. So let's say well, several ways to use the sum of money which I have on my accounts. So the first way is the following. So I see, for example, I see the signal to buy here, but still, if we look at, for example, the moving average, if we look at the present situation, you see that the trend is still bearish. Yeah, so I cannot say that actually bulls are winning here. Yes, I see the correction here only. Well, in this case, If I try to trade up, it means that I'm trading against the main trends, against the bearish trends. Actually, I'm risking. Well, in this case, I'm using a really small sum of money. So just in case to, so because this operation, so this position will be quite risky. Otherwise, so for example, here, if I believe that British pounds will go down, in this case, I can increase the sum of money. So, well, in this case, I'm using the fixed sum of money, but which is bigger, because I'm trading following the main trend, which is bearish, actually. So, actually, my money management, the sum of money which I use, it all depends on the quality of signals and the trends. Well, how can we open this page? What page would you like to open? Well, actually, you can find economic calendar on our platform. So if you go to, by the way, it's in Portuguese here now. Well, that's really interesting. So let's switch into English. And guys, well, if you go to, well, analytics, for example, so you can find the same economic calendar. Well, I don't know why it's in Arabian language. So here, well, this is some type of a bag or whatever. So let's change the time zone again. Yes, GDP time. And let's have a look. So, well, today is Friday. So the same in economic calendar. So you can try to find this news about, well, GDP, the preliminary facts, and you see that the data is the following. Well, the forecast is 2%, while the previous fact was 2.2%. Well, speaking about economic calendar, you can find it anywhere you want. Anything else? No. Well, guys, in this case, I would like to thank you for attending such master classes. Well, I hope that information which I gave to you was interesting and was useful. If it is like this, so please click like. Yes, if not, click dislike. And of course, I hope to see you all again next time. We'll continue discussing psychological mistakes and trading psychology, one of the most interesting topics in trading. Thank you and bye bye.